is what's called the 10 macroeconomic trends that are all occurring at the same time within that 60-mile radius. Flat land, affordable, business-friendly city government. You don't want to invest in cities that have a lot of red tape and put up a lot of, blockages and obstacles between the developers and the land. So business-friendly city government, you got to have population growth, you got to have infrastructure growth.
Welcome to the Business Ownership Podcast, brought to you by Awareness Strategies, helping you navigate the waters between entrepreneurship and ownership. Hey there, peeps. This is Michelle Nedelec, and I'm super glad that you're here with us today because I am here with my most amazing guest, Brad. Brad, thank you so much for being here with us today.
Oh, thank you for having me.
Awesome. So give everybody the highlight of who you are and what you do for business.
Well, who I am, I'm a guy, semi-retired 72-year-old person who switched careers at 67 years old. I left my 40-year career as a successful business coach and seminar leader and trainer. And now I am in the business of selling dirt.
Yahoo!
That's what I do. I'm actually called a land banking consultant, and I help patient investors purchase land in the path of growth and then generate legacy wealth by selling it to a developer.
Nice. I love it. So what made you decide to go into land banking?
It's a great question. So I do a quarterly net worth statement. Been doing it since March of 1989 when I was engaged to my wife. We were going to get married in a few months. I decided to start tracking every quarter, at the end of each quarter, how were we doing? I wanted to see if we were making progress. December 31st, 2011, I looked at the numbers and I realized with my wife's 401k from Oracle, we could retire together. She could retire by herself. But I looked at my numbers and my net worth, separately from hers, and I realized I'm screwed. I don't have enough money. I was 60 years old at the time, about to become 61 in like a month. No, in 9 days. January 9th was my birthday. And that was very sobering, Michelle, to say the least. So I called my land banker. Her name is Marcella Silva. She was in a networking group with me. She's actually married to one of my best friends. And I said, come to the house, do your presentation. My wife sits in on the presentation. At the end, she says, no, thank you. Not interested in buying dirt. I like my Oracle 401. I like mutual funds and I'm doing very well. I said, yeah, I know. I do our net worth statement. You're doing fantastic. So she walks out of the room and I turned to Marcella. I said, I got to get something into my retirement account. So 2 months later, I closed on my first property. A year later, got my second. A year later, got my third. And then finally, my wife comes with me to hear Marcella speaking at a hotel. You know how they rent a room and all of us investors, we bring our friends to show them the opportunity and we get referral fees. We're called finders. So I didn't have any guests, but my wife says, okay, I'll go. I said, well, why do you want to go? She said, I just want to see what's going on. You bought 3 properties. You've traveled down to Southern California to look at the land. You go to the annual meeting, maybe I missed something, but the whole way in the car, Michelle, she's going, but I'm not going to buy. I'm not going to buy any land. I said, I don't care if you don't buy land. I'm thrilled that you just want to go learn more. Short story. We get to the hotel. She listens to Marcella's presentation and she buys 2 properties right there in the hotel.
Warning to anybody who is thinking that, don't say it out loud, because if you say it 3 times, you don't mean it anymore.
Right,
and it's almost guaranteed that you're going to buy something.
Yes.
That's how I got into about 3 out of 4 businesses.
Yep.
I know that well.
So that's the story of how I got started in land banking. Oh, and then eventually, after 40 plus years as a business coach, seminar leader. Oh, by the way, I remember earlier I said if my phone goes off, I don't know how to shut it off. It's probably somebody calling to buy dirt. I'll get back to them later. But I was a business coach and a seminar leader. And after 40 plus years doing that, the same day my wife was dismissed, not fired, not let go, not canned, not downsized, right size. She was dismissed from Oracle. And they used that terminology. They made it up because they didn't have to pay her any unemployment insurance because she wasn't technically fired. Yeah, strange. And again, let's not get into Big O and all the stuff I feel about Larry.
They just have big lawyers.
Yeah, they have a whole slew of them. Anyway, that was Wednesday, January 31st, 2018. I remember like it was yesterday. And so she's done with her job. And I said, okay, we're going out for dinner with Marcella. Just coincidentally, we had scheduled dinner with Marcella and her husband, Rick. So I said, let's go out for dinner. We'll tell them our story. And of course, they'll commiserate and they'll feel sorry for us. We tell them the story and they start laughing at us. I said, what the F is going on? 6-figure job, vacation pay, 401k match. They were giving us free money. Employee stock ownership program where she could buy Oracle stock at a discount. I said, it's all gone. She's not going back to work.
Now you know why.
She's retired and we got to live on my coaching salary. And Rick and Marcella stopped laughing long enough to say, Brad, you're not going to believe this. 2 weeks ago, we scheduled tonight's dinner. I said, yeah, what's your point? A week ago, Valor, the name of the company I now work for, lifted the moratorium on hiring new real estate agents. I had just gotten my real estate license 2 months earlier for another story, which I won't go into today. And Marcella says, we want you to move your license from that company to us and be the first person on our team. And I was like, holy cow. One door had shut really tightly closed. Another one opened really wide, but I didn't step in. I didn't say, yes, we're driving home. My wife goes, I don't get it. You love dirt. You're a great salesperson. Why don't you want to do that? I said, Marie, they're asking me to leave a 40-year career. The only thing I've done my entire adult life is coaching and speaking and training. And now I'm going to sell dirt. She leans over in the car, Michelle, gets right next to my ear and she goes, Brad, you'd be an idiot not to take this new career opportunity. And I did not marry an idiot.
I like her already.
Yes. Everybody I tell this story say, I like your wife. I said, yeah, so do I. So I laughed. When I got done laughing, it fortunately didn't drive off the road because I was laughing so hard. I said, okay, you're absolutely correct. I will call Marcella the next morning, February 1st. 8 days later, my license was moved. And as my clients left, at the end of their coaching contracts, I didn't renew any of them. One guy wouldn't let me fire him. So he stayed with me for, I don't know, it's another 5 years he's been with me. But other than him, or he, whatever the correct word is, other than he, I let all my coaching clients go, and all I do now is sell dirt.
Nice.
That's my story.
It's a fantastic story because I think a lot of people can relate to it. And I think a lot of people hit a precipice where they panic, especially if they've been let go, discharged, ignored, whatever legal terminology they want to use for it now. But to know that there's an option available to them that they can just pick up and move into, whether they have any assets available to them or not. And I think that's the terrifying part. And especially in tumultuous times, I'm going to say it becomes paramount that people know that they have options, because options give us hope. So I love this story in that, and I love real estate in that. It has always been a place that I've known that somebody can go in without anything and build something.
Correct. 100%
So
agree.
If somebody is kind of in that position where they find themselves like, I don't have money to invest. Certainly don't have $100,000 if you live in metropolitan Idaho. I certainly don't have $1 million to invest in real estate. So what can they do to be able to start?
Well, there's a few things. If they want to work with us, first we educate. So we're not even allowed to sell land to anybody until we educate them first. But our minimum is only $25,000. And again, that still might be a high hurdle for some people. That's fine. There's other real estate ventures you can explore, tax lien deeds, maybe a syndication where you only put in a little bit and you pool it with other people. There's all kinds of other ways, take a real estate class for a couple of $1,000s. Usually those people that are teaching those classes make more teaching than they do actually doing the deals, but they've already done the deals and they have that experience. So you can get into mobile home parks, you can get into storage units. So a lot of other ways to invest in dirt, land, buildings, real estate of some kind. But with us, the minimum is $25,000, and that's all you need to get started. And most of my clients use retirement funds. Yep. So they do.
Well, and 25 is certainly, especially at this point in time, when there's a lot of things that you have to have at least 500,000, if not 100,000, to be able to even start with. And right. A lot of them are $1 million to start with. So let's talk about what you do and how you do it. first off, back up the bus. For those who don't know, what is land banking?
So the simplest definition is I help patient investors build and diversify their portfolios, usually a retirement portfolio, by investing in land that is strategically placed in the path of growth. And all of the land that we sell is within a 60-mile radius of downtown LA. Later, you can ask me why there, and I can explain
It's
why.
very specific.
Okay,
Yeah.
I can explain that later. But they hold. And when I say patient investors, our hold period is, generally speaking, on average, we tell people 7 to 10 years. This is not a flip. This is not like buy a single family residence, get in 90 days later, you fixed it all up and you sell it for a higher price and you make the difference between what you paid and what you sell it for. That's flipping. That's faster way to get money. With us, it's a longer hold, but our returns are also very generous. We want people to exit at no less than 3 to 7 times, not 3 to 7%, as the person this morning asked me, not 3 to 7%, 3 to 7x, 3 to 7 times whatever amount you put in, you should expect to hit somewhere in that range. Of course, I can never say the G word, guaranteed. There's no guarantee in any investment anywhere. Maybe if you buy treasury bonds, backed by the United States government. But even the United States government can default, as we saw recently. This is 2023 we're talking right now, and there was the chance the government was going to shut down or it was going to default on its debt, or, that could happen, but it's pretty unlikely that'll ever happen. But every other investment, crypto and stocks, they all have risk, as does land banking. We try to mitigate as much of that risk as we can by doing a lot of research. We actually have a part of our company is called the Research and Acquisition Department, and all they do is research the land to make sure that it's affordable, that it's free and clear of any hazards like buried gas tanks from 50 years ago or red-legged toad that's on the endangered species list, and that it is in the path of growth. So there's a reasonable assumption that it's going to increase in price.
Nice. So I have an understanding of why you're going 60 miles from LA, but what is it that makes that land more attractive as an investor?
Great question. So we have this, remember I alluded earlier to, we have to educate people. We have a 1-hour presentation that people have to take part in before they're even allowed to invest with us. And one part of that, small part of that hour, is what's called the 10 macroeconomic trends that are all occurring at the same time within that 60-mile radius. Flat land, affordable, business-friendly city government. You don't want to invest in cities that have a lot of red tape and put up a lot of blockages and obstacles between the developers and the land. So business-friendly city government. You got to have population growth. You got to have infrastructure growth. You have to have access to ports and rail and air and on and on. I don't even remember all 10. I'm still trying to memorize them all. I think I got 6 or 7 on that one. And adequate water supply. So all 10 of the economic factors that we've deemed necessary to make sure that it's an ongoing growth area are all inside that 60-mile radius of LA, downtown LA that I mentioned. And we prove that. And we don't just say it. We will show you city council reports. We'll show you the general plan. We will show you modifications to the general plan. We go to city council meetings to take notes and find out what's going on. We follow all new developments. Where are they breaking ground? What kind of building are they putting in? Who are the people that are coming in? Are they reputable? Is it Kaiser Hospital? Yeah. Well, guess what? All the land around that area where they're building the hospital, all that land just went up dramatically in value for either the parking lot or maybe another medical facility. Who knows? So we watch all that stuff. We keep track of all that stuff, and we know where the development's going. And that's why we buy in those areas. We follow those economic trends.
Right. So you may or may not be able to answer this. I think you can, but what about somebody that absolutely loves their neighborhood? Say they're somewhere in Kansas and they're going, yeah, but the land is cheap here. And yes, the population's growing and it's just more affordable to get in right now. Why does LA become more attractive to you than somewhere like that where the land is clearly more affordable, clearly more poised for expansion? All those kind of things.
Well, first of all, I don't know what the land prices in Kansas are. They could, on a per acre basis, could be very comparable to what we're finding, because we find really, really cheap land. One thing, just to digress for a second, people say, well, how do you do that? We have a whole process, but our bar is so high, we reject 29 out of every 30 properties that we look at as just not fitting our model. So number one, we screen a lot of properties before we buy one. Ask the person in Kansas, are they doing that? Are they looking around at all the things that are going on? Are they looking at all the economic factors? I don't know. So I can't say. We just know that if you're familiar at all with California, do you know where the Silicon Valley is? Or have you ever at least heard of the Silicon Valley? If you go to a Google, if you go to a Google Earth map and look at Milpitas, San Jose, that part of the South Bay, it's called. It's just at the bottom of the San Francisco Bay. If you go back, now you'd have to go back about 30 years, and you do this Google Earth shot, and there's no buildings. It was all farm.
I guess so, eh?
Yeah. Look, I'm not making
what
this
else
up.
Was there?
I don't
there
make this shit up.
Farms.
I don't make this shit up. It was cow farms, chicken farms. Go and look at the map. There's no buildings. You go Google Earth it now. Well, actually, about 15 years ago, there's no more land. The land that's there is undevelopable. There may be some empty parcels, but they're undevelopable for whatever reason. Maybe there's an easement. Maybe there's a culvert that when it rains, the rain runs through and you can't build on it. And you're not allowed. But there's no more land in the Silicon Valley. And you might have bought something 25, 30 years ago at $3,000, $4,000, $5,000 an acre, and you exited at $1 million an acre. Now, we don't have those kind of multiples right now. You buy land with us for 25, you'll exit 100, 110, 120 somewhere. But that's still a pretty good return. And you're not doing anything. There's no tenants, no toilets, no termites, no trouble. You pay your taxes once a year, which, by the way, are regulated by Proposition 13, passed in 1978, which caps not only the reassessed value when you buy it from us, because it goes, we buy it very cheap. We do mark it up. We have to make a little money to run the company. But even at the price that we sell it, it's below market, and it's capped at 1.3%, the new property tax. And they never give the whole 1.3% because it's undeveloped land. So they do it at less than that. And then the yearly increase is capped at no more than 2% per year. So even if you're paying, $500 the first year for your property tax, the next year it's $510. And then it's 520 and 20 cents or 40 cents. I can't do the math in my head that quickly. All right. Okay. So very low holding costs, very initial low entry fee. It's just time. You just have to be a patient investor and just have faith that in time, the land is going to go up. The value of the land will increase.
Well, and that was one of my favorite coaches in time said, you really want boring investments because boring investments become predictable. And to buy in Silicon Valley, there's no way you could have possibly known that was going to pop 5 years before it did, because you just didn't know. Whereas the predictability around LA is much more boring, consistent. They have to build out. They have to do it in a certain way. It has to take X amount of years because they have the litigation or the rules, regulations to put into place so that they know that they're doing it right when the time comes, which makes it a quote unquote boring investment, but adds that predictability to it.
Very boring. And just as an example, like you said, so in LA proper, in the city of LA, the part that's on the southern side of the mountains that have the Hollywood sign on it, we're actually where Lancaster and Palmdale. I know your listeners can't see me pointing to the map, but just north of that sign, you go over the San Andreas Mountains and the San Andreas Los Padres National Forest. You go Highway 14 up over that hill, and then you come down into the Antelope Valley on the other side. So it's only 50 miles maybe from downtown LA. No traffic, an hour, lots of traffic, 4 hours. But you buy a house in Los Angeles proper, a 3-bedroom, 2-bath house, you're talking $3 million to $5 million. minimally probably, and it's not even going to be that great a house. You can buy a
1950s.
brand new 3-bedroom, 2-bath house, just brand new, built by the builder in a gated community with a pool and a gym, solar on the roof, because it's mandated in Lancaster and Palmdale. They have to have solar. They're so energy conscious there that they require now all buildings and homes in the last almost 10 years have to have solar on them. You get all that, 450, 375 to 450 in that range. Somebody who doesn't have, and now with COVID and what the pandemic did, got all these remote workers who realize, I don't have to go into the office. I don't have to waste time sitting at the water cooler. I don't have to buy lunch, commute, pay for gas, spend all that time. I can work at home. If I have to get to a lunch meeting, I can be there in 45 minutes, maybe an hour, door to door. Of course, non-rush hour traffic, I'm talking LA. So I'll leave my house at 11, be at the lunch meeting at 12, be done at 1 and be home at 2, pick my kids up at school, come home, go swimming, do a little work, maybe work in the evening. The pandemic changed everything as far as where workers can work from. So a lot of the people, the Los Angelinos, they're leaving LA proper. A lot of the renters are now getting into affordable housing and having a commute, if they even have to have a commute, that's 45 minutes to an hour if they do it during the right time.
Love it. And when you're talking about kind of that 10-year span of investment, obviously you don't want to be 65 going, oops, did it again, and looking at this, because then you're going, okay, I'm going to make it to 75 to be able to do this. Who would be the ideal prospect for this?
Great question. And by the way, I bought my first property at 61 years old. So, and I'm 72 now, haven't sold it yet. Don't care. I know it's gone up in value over 4 times based on sales in the area. So I'll just keep waiting. You know, if my $100,000 property winds up, I get $1 million and it took me 20 years. Let's see. I went from 100,000 to $1 million in 20 years with no effort. Oh, and by the way, did I mention it's in my Roth IRA? So Uncle Sam gets no capital gains tax. It's all that 900 is all my, yeah, I'll do that 20 times a day if I could. 100K into $1 million in 20 years with no effort. It's not a bad investment. Like you said, it's boring and it's lazy and I love it. But an ideal investor,
yeah,
I would say, you know, probably 30s to 40s. So they've amassed a little, you know, some retirement fund. Maybe they got 100, 200, 300 in their retirement fund. And they know it's going to sit for another 20 or 30 years anyway. Well, how's it working for you right now? What do you got invested in? Crypto? In the tank. Stock market? Up and down, up and down, up and down is enough to give you a heart attack. If you own single family residences, you got tenants, toilets, and termites. So you want something nice and easy that you don't have to look at except once a year to pay your property tax. This would be an excellent investment for somebody like that. And most of my clients, I would say 30s, 40s, 50s. I have one or a couple that are in the 60s, like myself, and now in my 70s. And I would keep buying land, but my wife won't let me buy anymore. She says, we have 11 properties. That's enough. I said, well, let's compromise. When we sell one, we're going to do 3 things. We're going to put a major chunk into retirement. We're going to go on a really nice vacation. And we're going to replace that property with another one, maybe a smaller one, maybe the same size. We'll see how big a profit we have. So we're going to do all 3 of those things whenever we sell one. And then that way, our daughter's going to be fabulously wealthy in a few years. If we kick the bucket, can't use it ourselves, we just will it all to her through our trust, and she'll take it to the bank, smiling all the way.
Nice. So what are some of the aspects of getting the training ahead of time? Like, one, I'm assuming that anybody from across the country can invest in this. Yes. Can anybody from across country take the training? Do you have to be anywhere specific?
Well, it's not really a training. So let's back up first. We just call it education.
Yep.
And it can be worldwide. They don't have to be in the US. As long as the country they are in allows investing in the United States, legally allows people to do that. But we don't accept people from certain countries. We're afraid of money laundering or things like that. You know, Bangladesh, Yemen, a few other places. I would have to discuss.
If you're listening to this, you can probably invest there. That's probably a safe bet.
Most likely, yes. And again, the pandemic skyrocketed my business. I have investors from Panama, Thailand, Canada, Mexico, Germany. I'm speaking with several more people from several other countries. We had somebody from Slovakia the other day that saw Marcella do her presentation. So pretty much worldwide, and what was the other part of the question? Education versus training. It's not really a training. It's a 1-hour presentation that we will do for them. We'll send them a link so they can sign up for it, and they will learn. They'll get answers to 95% of the questions that they have. A lot of what I've covered here, but in greater depth. Can I invest with friends? If so, how many? What about family members? There's different rules for that. Can I do a 1031 exchange, which people might know is, buying real estate and then you sell that real estate and buy a replacement real estate property and defer your taxes, not avoid. You're going to owe Uncle Sam eventually, but you can defer them with a 1031 exchange. They want to know, can I use my IRAs? Can I use cash? Can I use a HELOC? Yes, but we don't advise that. In fact, I would probably not sell it to you, because then now you're paying your interest on your HELOC, and that's going to increase your carrying costs, which is going to decrease your overall return. We don't like that. So we want nice. My criteria, Michelle, they have to be nice, they have to be patient, and they have to have 25,000 liquid in some form somewhere to invest. And then we'll send them the link. They can get educated. Once they watch that, they're still going to have questions. So then they get a hold of me and Marcella. The three of us get together on a call. The husband and wife, they both have to be present, just like for a listing presentation to sell the house. And we get on a call, and we'll stay on as long. The longest call we ever had was 2 hours. Person just, what about this? Okay. Whoa, what about, I thought of another question. And it was like, 2 hours. But they bought in the end. Mm-hmm. Every concern they had was addressed, and they said, "Okay, I'm ready to buy. Get me, $75,000 property." And then we go and we find them a property and sell it to them.
Nice. I love it. So, do you have any Cinderella stories of any of your past clients, or are they still kind of buying and holding?
Yes and yes. So, one that I know of, but because it's all confidential, I can't mention names or anything like that. But this is one of my first clients. She bought 5 years ago. She bought a huge property. I believe it's 40 acres, or else it was 10. I mean, she bought 2 properties at the same time. But anyway, the sale price was $750,000. In our industry, that's a whale. That's so rare. That's the only one I've ever sold at that price. And Marcella, I don't think, has ever sold one. I think I have one of the biggest sales. For a rookie, it was the biggest sale ever in the history of the company. $750,000. She is currently negotiating for $2 million to exit. And she wants to do a 1031 exchange to avoid the tax. We're hoping that she will do the 1031 exchange with us and buy a bigger piece of property or several properties. And we understand that she's putting this in the name of her grandchild. She doesn't like her son. Nobody will know who I'm talking about, but apparently she doesn't like her sibling.
Whose moms don't like you.
Could be doesn't like her offspring. So she's bypassing and putting it directly in the name of the granddaughter. And if it's $2 million and she 3X's it, we're talking $6 million. That granddaughter's never going to have to work a day in her life when she reaches the age that she's allowed to inherit and do all that stuff. I have another client that is less than 2 years in. I'm very jealous of them, by the way. They bought solar, and they're currently negotiating a lease. So sometimes the energy companies don't have the cash up front to buy the property for the 3 to 7x return. So they'll just go with a land lease. And it's 500 an acre, 1,000 an acre. They started off offering them like 250 an acre, and we offer free negotiation coaching. So they called me and they said, "Brad, I just got this email." I said, "Send me the email. Let me look at it." Call the CEO. He gets involved and starts to give some pointers to me to give to them to go back and ask the energy company. We know that land is going to go somewhere between 2,000 and 2,500 an acre. and they're at 250. So they got a lot of negotiating to do, but usually they're 25-year leases with a 2% per year escalation clause, and usually 1 or 2 5-year renewal periods. So they could be locking in cash flow for 25 to 35 years and still own the land at the end of that time period to give away, to sell, to do whatever they want. The panels would be on there, so the energy company would either take them away or they would just say, it's too expensive to remove them. We're just going to leave them here. You can be your own energy company on your one little, 2-acre lot. So we'll see what happens. But that's an example of what can happen for a lease, a sale. And actually, I got my first offer. My wife got her first offer. She's had the property about 5 years with a friend. They're 50-50. It's in a business park, and they're building a giant recreation center on 320 acres that are contiguous to 13 properties. They're all like just to the south, touching that property. And 7 of the 13 are owned by our company's investors. They don't know that. So they think they're negotiating with 13 different people, but 7 of us are all getting the same information to make sure that we're all getting the same price. And we're talking just about an easement. They want to build a road, a drainage ditch that will eventually be paved over. And so they're going to increase the value of our property. It's like they're building a street, half on their property and half on our property. So whoever buys our property is already going to have saved several $100,000s because they don't have to build that street now. They can just go in and put in the land. They can drive the trucks in. They don't have to get an easement. There'll be a road that they can drive on. So that's going to increase the value of my wife's property substantially. Let's just put it that way. And we're gonna make some money now on the easement. It's like a rental payment that they give us, and then when they're done, the easement is over, but the street is there, and it's like, okay, we got half of a street on our property. It just made our property maybe double in value. So those are 3
Which is
examples.
bonus because the city could always assess the land and just go, no, it's ours. We're putting in a road. Bye-bye. So yeah, brilliant.
We're happy. Let's just say we're very happy.
Nice. So I know our listeners are going to want more from you. How did they start that journey with you?
Best thing is to email me. If they're watching, they can see on the screen. My email is there. It's just my name, Brad@bradwarren.com. I got that 25 years ago because I knew I would never forget at least I hope I never forget my own name. So I don't forget my email.
You can always look it up.
Who knows? I could just Google it, right? Just Google this guy in Castro Valley.
Take a picture of yourself going,
who is this guy? Use some kind of ID thing. My phone will tell me. So Brad@bradwarren.com. I respond to emails within 24 hours. Most likely we would just set up a Zoom to say hi and get to know one another. I would send them the link to watch. A lot of times I send the link early and I just say, look, before we even schedule something, why don't you watch this and see if this type of investment is even interesting to you? Take notes. And after you've watched it, if you're then still interested, then let's schedule a call. And that way we save everybody a lot of time. If they're looking for cash flow, it's like, don't bother calling me. There's no cash flow. You're not going to get it. This is a buy and hold, set it and forget it, lazy person's way of investing in real estate.
Perfect. We will, of course, have Brad's links in the show notes, so you can go ahead and scroll down, click on the link, open it up in a new browser, because, of course, we're not done yet. So, Brad, at what point in life did you know that you were especially kind of crazy enough to think that you could become an entrepreneur?
Oh, probably around 8 or 9 years old. I'm 72 now. I think I might have mentioned that at the very beginning. Maybe not. I've been on a lot of calls today, so I don't know what I've told to who or to whom. But I started babysitting. I think I was 9 at the time, and there were 9 women just on my one block that were all pregnant at the same time. They were all, including my mom. And they all had babies, and they all need babysitters. So I started out babysitting. I had a newspaper route on my bicycle, no handbrakes. This was like a foot brake bicycle. This is how far back I'm going here. And I was pretty much an entrepreneur. I shoveled walks. I grew up in New York. So snow in the winter, leaves in the fall, mowing lawns in the summer. I worked at a gas station. I worked for an air conditioning company. I did a lot of little odd jobs. And I did not want to work for someone else. I'm not a good employee. Let's put it that way.
A great babysitter.
Yeah, good babysitter, but 9 to 5, nah, that's not my kind of thing. So I've pretty much been an entrepreneur, and I opened my business in 1978 when I was done with graduate school. Officially opened Bradley K. Warren and Associates Incorporated, and been an entrepreneur pretty much full time since then. Now I call myself semi-retired. Still working, but not hard.
Seriously, a hard worker, obviously.
Yeah. Working hard or hardly working? Hardly working.
Love it. You've been absolutely awesome. Any last words for our peeps?
I would say due diligence rings in my head. Let me also tell your listeners, Michelle, I've made a tremendous number of mistakes in investing, including in land. Broke even and lost money on 2 previous land deals 15, 20 years ago, because I did not do my due diligence. I didn't really dig in and ask a lot of questions. I just kind of trusted the person. They seemed nice. It kind of made sense. I'm a lot more careful, and I would ask people to be careful. Watch our program, get educated, ask lots of questions, make sure that this is something that you really understand before you invest in it. Like I would recommend for any investment, make sure that you really understand what it is that you're doing. Make sure you get it in writing. Everything we do with people is in writing, a 2-page contract to start, and then you get a deed from the state of California, officially stamped and everything. But do your due diligence on any investment. Doesn't guarantee that you won't lose money, but you'll lose less. It'll be a less expensive learning lesson, and you'll increase the likelihood that your other investments will all do well.
As I like to say, ask 3 times as many questions as you spend dollars. That's really well.
I like that. That's good. Very good.
You have been absolutely fantastic. Thank you again for your time. I appreciate it, and I know how valuable it is.
Oh, thank you. It's been my pleasure, and good luck to everybody out there.
Awesome. Peeps, this is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show, share it with your friends. We love helping entrepreneurs grow.
Are you running a business over 7 figures but still struggling with technology headaches? Pay attention, you do not want to miss this offer. This podcast episode is brought to you by Awareness Strategies, who is offering a custom-built digital adoption roadmap for anyone running a business over 7 figures who's wanting to grow their business in the next 5 years. And it's not just a roadmap, they offer full implementation as well if that scares the out of you. Check out awarenessstrategies.com/roadmap for more details today. The link's in the show's notes. Don't regret not doing this. Do it now. That's awarenessstrategies.com/roadmap.